I know a lot of you guys saw my previous video and really enjoyed it because I was showing you the entire portfolio that I had. And also towards the end, I spoke about the portfolio that I'm creating for my son, right? So I think a lot of you guys asked me, Shashank, can you show me that portfolio as well? So in today's episode, I'm going to quickly dive into what are the stocks that I have created from a long-term perspective for my son. Let me first, before I get into the video, let me make you understand what is the logic behind this, right? So in the past, as you see that, if you look at my parents or your parents, right, in the past, we could only invest in either gold or real estate because in 2000 and 2010, investing in stocks was very difficult at that point, and it was considered satta bazaar, and it was not so open like it was today. So, and what we used to do is they used to pass down their real estate assets, or they used to pass down their gold to our generation, right, to people like me and you. But I realized that now if I want to pass down something to my son, I don't want to pass down a real estate, get a house and keep it for him, or get gold and keep it for him. Why not just accumulate stocks that I feel should be relevant and should be there for a very long period of time, and actually start accumulating that today for him, so that by the time he's 25, 30 years of age, I can actually pass this on to him and say, enjoy, have a good life, right? So for that, I had to understand and build a portfolio. Now, in this portfolio, I had to keep some safe stocks and some risky stocks, right? Now, what do I mean by safe stocks? Now, obviously, I want the money to grow as well, and I wanted to survive for at least 25, 30 years. So these are the two criteria that I had. So 80% of my portfolio is for the long term, ultra long term, 30-year time frame, just buy and forget kind of a scenario. And 20% I still do churning. What do I mean by churning is I buy some, sell immediately after maybe a few months, or maybe buy some, sell after a year or whatever. So things like this that I will keep doing. So as of now, my son was born on May 1st, 2024, which is this year. So I started my SIP immediately after that. So let me quickly show you how this looks like. So as you can see my screen now, this is the small case. Now I have made something called as a next gen SIP baby 30 years, right? So this is something, let me just go inside. As you can see, the invested amount is from May 7, 2024. Now please understand, this is an SIP based portfolio. This is not like a lump sum portfolio that I've invested and I'm done. This is something that I'm investing every single month. Anywhere between 50,000 to 60 to 70,000 depends, right? Sometimes I invest 50, sometimes I invest 75. Now recently we had my baby's birth ceremony, we had some totlu ceremony, we call it, like putting him in the cradle, we had naming ceremony. So when we do all of that, people come and shower the baby with gifts. So all that money that he's received in these events also go into this SIV basket itself. I don't keep anything, everything is for him. Now let me just go through this entire portfolio. Now this is just a 2.5 month portfolio. So May, June, July, August. So 4 months are done. This is the fifth month that we are in right now. So it's a 4 month old portfolio with the current value that has been invested is 6.76, and the returns is just 3.15% because, as I said, it's an SIP based returns. And if I show you the details here, this is what you can see, right? 900 rupees in dividends and 20,000 as current return. But I don't care about the returns, to be honest, because this is not my returns. I'm never going to take this money out of my bank account. It is not coming into my bank account. It is going to be transferred to my son when he becomes older. So what are the companies? Currently, this has a 17 stock portfolio. Now, I don't like having 17 stocks, but I'll explain why I have 17 stocks. I usually prefer 10 to 15. 15 is the max I go to. But let me show you the stocks, right? So I have TCS. And if you look at the weightage, most of the weightage is pretty much the same because I don't care too much about the weightage. I want everything to be similar. So TCS, ITC, obviously you guys both know. I don't have to go deep dive into these stocks. These are large cap companies. Now, you might also ask me, Shashank, why are you investing in these companies, not just buy Nifty 50 and sit down? Because I want the added advantage of TCS and ITC. I want the splits, the bonuses, and there are some advantages to this, right? So TCS gives me a healthy dividend every month, right? Which I will take back, and not every month, but TCS gives me a dividend every year. So I will take that money, put it back into this fund for it to grow. So dividend reinvestment is happening. It is a manual process. It comes into my bank account. I will take it, put it back into this account and grow it, right? As of now, this is in my bank account and not in my son's name yet. ITC is actually a double play. One is, yes, FMCG, quite a safe play right now, and the world is going to shit. So ITC is a very good FMCG play, and I know for a fact ITC will be there even when he's maybe 20, 25 years of age, right? Right now he's just 4, 5 months old. Now ITC also does a double play because yes, the FMCG part will do well, but ITC is also focusing on a demerger. Now, this demerger has been happening from a very long period of time. And if you actually break down ITC, you will see that the hotel business is now doing really well. Their paper agri business is up and down. ITC also has a very strong growing company called ITC Infotech, and then they have the cigarette business separate. Cigarette business is growing year on year. That is something that constantly grows. Plus, there was no tax changes in this current budget, so ITC was favorable. So I'm holding this for a long-term demerger value unlocking play. And this is not something that I will enjoy. This is something my son will enjoy, right? And in that meantime, dividend bonus, he can enjoy whatever he wants. Another company is IHCL. Now, IHCL is basically Taj Hotels. Now, I have a theory with Taj Hotels. Even when my dad was growing up, his biggest dream at that point was to go inside Taj Hotels and have a cup of coffee. Now, Taj Hotels has been surviving since that time, has survived in my generation, and I'm sure Taj will do really well in my son's generation as well. Because if you look at the entire market, there are only few players that are doing really well in this entire space. Now, if you look at IHCL, what they've done in the recent past, earlier they used to go buy the land, they used to construct the entire hotel, and it used to take a long time for them to do it. You need a lot of loan to do it, and there was a lot of debt cycle that was created as well. So now what IHCL is doing, they've gone into an asset light model where they're doing joint partnership with landowners. So landowner is there, they go on top, convert an existing hotel and put a Taj management sticker on it, and that is what they do really well. So Taj is something that I've taken. As you see, TCS in fact has given me 10% return in the last 4 months. ITC has given 9, and IHCL has also given 9. Now this is an SIP based return, it is not a direct return play. Then I have something called Colgate. Now, Colgate is a beautiful play for long term. If you have just looked at Colgate's recent performance, this is something that is doing really well. So let me just show you. Now it has gone a little overvalued because it's come to 70, but Colgate from a max chart perspective, it's just wonderful, right? This is something that I know for a fact. I don't care about what price you buy. This is buy at any price kind of a theory as of now. And yes, it is supremely overvalued. This will correct. But again, I don't care, because if it corrects, then I'm very happy. Let it come back down to 53p. I will start buying again, right? And this is something also known as predictable revenue with Colgate. So you know that there is no something new is not coming out with Colgate. Now I have one risky play. I have a company called Venus Pipes. Now Venus Pipes is again a very interesting play. This is not a 30-year play. Remember, I told you that I want to keep one or two small short momentum plays that might do well. So Venus Pipe is a small cap market cap company, which is 4,800. I will keep this as long as the fundamentals are working. What do I mean by fundamentals? If you look at this company has been significantly giving very good top line since 2019. It has also increased its operating profit from 8 to 167. Net profit has gone from 4 crores to 96 crores. EPS has gone from 4 to 47. So this is something that I would constantly continue holding for a very long period of time until the fundamentals play out. But this will not become a massive play in my opinion, because as soon as it becomes a big company, there will be a saturation that hits in, and other piping companies will definitely be at a better margin. But this is until that, it's only at 4,000 crore market cap. Let it go up as much as it can. It'll become a 4-5x compounder, and then I will sell it. Right. The next company, as you see, is called Titan. Now, Titan again is something that I know for a fact will do well. Right now, they're getting disrupted a little bit. In the, I think that Birla brand has come out. There are other brands that are coming and playing out as well. So I think Titan is something that is doing little bad right now. But I'm going to focus on the Titan's management, and I know for a fact they'll figure something out. So anyway, it is profitable for me, so I'm not too worried about it. And as I said, it is an SIP. So every time it fell down, I kept buying, and now it has started going back up. So Titan again is a 30-year play. Pidilite again 30-year play. Very strong moat that it has, that it is in this space for a very long time. Nobody has disrupted it. Nobody's coming close to disrupt it. So this is something that I will see playing out for a very long period of time. Then we have our favorite, a lot of people talk about this, which is Jio Financial Services. एक तो समझ में नहीं आता क्या है ये business में, I have no idea. But for one thing I know for a fact, and this is a pure bet on Ambani ji, Jio Financial Services. If he does well, I do well. So if tomorrow Ambani becomes very rich and his son starts doing a massive wedding, I want my son to be very happy about it and not feel sad about it, because he's like, Ambani multiplied his wealth by 10x. I also multiplied my wealth by 10x because I had invested in Jio Financial Services. This, I feel, will become a very dominant force in the entire financial services play very soon. And this is something that maybe I will see in the next 5 to 7 years. This will become one of the dominant forces. So Jio Financial play, SIP is going on constantly, which is continuously going on, and same with Reliance as well. The Reliance, why I'm doing SIP mainly is because I want the value unlocking that is happening with Reliance, right? I spoke about this, I think, in my community as well, that Reliance, I feel, is going to be one of the best bets that anyone can take in the next few years, because they are going to demerge their business into the oil business, retail business, and the Jio business, right? Whereas retail and oil business is cash king, and Geo is the growing sector. So all three are going to give different value unlockings, and this is going to be very interesting for us to watch. Coming to Anand Rathi. Now, there's a reason why I like this company, and I'll show you why. Right? Let me open screener. Now, Anand Rathi is a 16,000 crore wealth management company. There are different type of wealth management companies. The competition here is Nuvama and Motilal Oswal. Both are good. Nuvama is also good. Anand Rathi is also good. I am just buying Anand Rathi because it is currently already at a valuation peak. But the reason why I like it is, boss, if India makes money, Anand Rathi makes money. It is as simple as that. They are a wealth management company. They manage rich people's money and ensure that rich people stay rich. That is the simple bottom line. It is a beautiful free cash flow business. As you can see, the money that comes in this business is a high margin business. And when high margin businesses are there, cash flow becomes high margin, reserves becomes high margin. Everything starts looking really well. Promoter holding is pretty significantly good, right? So it is a very good cash cow that keeps coming, and they take all this cash cow that they make and they start purchasing more assets. They start investing in different scenarios. So this is something that will do really well over time. It will give dividends, bonuses, splits. Everything will happen in this stock. So that is why Anand Rathi is one of my top picks as well in my future portfolio, right? Then I have Max Healthcare. So I wanted to take one healthcare company in this, like either an Apollo Hospital, Narayana Hrudayalaya, and Max Healthcare were the three options. I kind of took a bet with Max Healthcare because I feel both Narayan Hrudayalaya, Apollo have already gone to their peak, close to their peak. Now the growth rate would be a little saturated. I think Max Healthcare is doing a lot of moves in the space. So I thought, let me take a quick bet on Max Healthcare. This also seems interesting. As you can see, it's an 84,000 crore market cap company. It recently went up. It recently gave a good rally, but they are doing some good capex, as you call it, in the space. And I prefer hospital companies because they're pretty good, and you can see huge growth has been unlocked after 2020. So some plays are happening in the hospital space, right? So this is something that I'm bullish on. And with medical inflation only going up, I feel hospitals will also only go up. So Max Healthcare is another pick. Next, we have my favorite, my personal favorite, which is Varun Beverages, which has made a lot of money for me in the past in across my different portfolios. But this is an SIP that I'm doing. So Varun Beverages is a no-brainer. One of the biggest, I think the only PepsiCo companies in India right now. They're the master franchisee here. They do the bottling for them. Then they went into snacks. They went into everything. Now they're expanding to different international regions. Even the Sting that you have is by Varun Beverages. So this is a very beautiful play that is playing out, that will play out in the future as well. We have Tata Power. Now, Tata Power is my pure play bet on the future of green energy. Because I feel, as I told you, in the green energy market, 3 to 4 players will dominate this market. It will be Tata Power, JSW, Adani Green, and Reliance. Now, Adani Green is very dependent on the government. So if I actually look at it, there's going to be three major players. I feel Tata will be one of the major players. So if the pie is this big, Tata will at least have 1/3 of that pie. And if you read their investor presentations, you will understand that Tata Power's green energy business operates at a 35% EBITDA margin, which is a 35% earnings before interest, depreciation, and tax margin. Interest component is surely high, but having a 35% EBITDA margin means I can service my interest very easily, and I will make free cash flow, which can be used to fund further big projects. So having a 35% margin in green energy business is crazy, and this is why I'm taking Tata. This is not a bet for today. This is a 2047 play. Right, 2047 के लिए ये होगा. Whatever it is, this will not be bad by the next 30 years. Right, so that is my logic. Then I have another company called Sansera Engineering. Now I wanted to take one company in the automotive space, proxy automotive space. See, we know that two-wheelers will do well, three-wheelers will do well. You can see TVS Motors at an all-time high, Bajaj Auto at an all-time high, Tata Motors and Mahindra did so well in the recent past run-up. Now I went into the proxy play. Now proxy play has companies like RACL, GearTech, Sansera, Precall. These are all good companies. Precall I've taken in my other portfolio. In this portfolio, I've taken Sansera. I feel both of them are doing well. And if you see Sansera, it is a very slow growth. It is not a slow growth. I would say it's a very sustainable growth model company. If you see this, it keeps growing. Aram se it grows, not too aggressive. But the pads have also keep growing. So chill hai ye. Matlab next 30 years ke liye kharid ke rakho. Tension nahi hai. That is what I'm looking at it from Sansera. I have Precall also. As you can see, both of the proxy plays are with me. So any one of them win, I win. That is what my logic is. Both will do well. Then again, if I go back into the IT automotive space, I have gone into KPIT for the future of green energy. And I feel KPIT is doing really well in the EV space. Also, it has invested heavy amounts of capital into sodium ion battery technology, which is going to be the next big thing in the battery technology space as of now, what we can foresee. Obviously, there'll be more advancements in the future, but as of now, KPIT is poised to do well. IT company doing well every year, no stress on this as well. Good bonuses, good dividends, everything will come over time. Over 30 years, definitely something or the other will play out. Then I have the company that I have taken a personal bet on as well. This is a micro cap company called Max India. Again, it is a joint venture of Max Group with Axis Bank. This basically tackles the old age home space. Now, old age home space is not a theme today, but will surely become a theme in the next 15 to 20 years, or at least 10 years. This theme will start playing out really well. So I am managing to buy it right now at very low valuations, very low premiums. Risk reward ratio is wonderful. I don't think it can go down more because it is trading at 1,000 crore market cap, and the cash in bank for them itself is 500 crores. So I don't think there will be a further dip, but I keep buying it. Yes, it is not performing well, but I don't expect this to perform well anytime soon. But this can become an outlier. Now, if you had to ask me, Shashank, out of these 17 stocks, if I had to sell two and make it a 15 stock portfolio, I would surely remove Max India from this, and maybe I would remove one of Sansera or Precall, right? That would make it a perfect 15 stock, long term, well balanced across large cap and mid cap with future growth potential, right? So if you ask me for IT, I would either keep KPIT or I would keep Persistent or Coforge, one mid cap IT stock, because I already have one large cap. So I kept one mid cap. I have TCS, so I kept that. I have ITC, which I feel is pretty good from an FMCG perspective. Colgate also, I would put it in this category only, same FMCG perspective. Pidilite is works across the domain, so that is good. Even if real estate does well, Pidilite will do well. So guys, I hope you enjoyed this entire episode, because see, the reason why I do this episode is to be as transparent as possible, and I'm showing you things that I'm investing right now for my own child. So there is no nonsense that I do with this. This is my own child and I'm investing in it, and I keep giving regular updates about this in my paid YouTube community that is there. I put it there every time. So every time I bought Precall recently, I put an update for that. So I keep managing this baby portfolio actively, and I keep putting the updates of this baby portfolio in the community as well. So if you want to know more, you can join the community, because we keep posting almost 2 to 3 insightful posts every single week about what I've been buying, what I look at the market. I recently put a beautiful post about the entire market and what are the stocks that I just picked up recently, right? And what am I noticing in the market? So all of these things I talk about. Now, if you like this video, click on the like button, share this with your friends who recently become parents, because I know it can be very stressful and I know you want to manage it. And for all the people who are parents or who might be thinking of a long-term portfolio, I want you to put in the comment section below, what do you have doubts on anything related to the stock market? With the stocks that you have, I will try to answer them as much as possible. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye.